One of the comments heard during the thick of the crisis was that it was ironic that the international banking sector should suffer its worst crisis in recent years, just as the Basel II capital adequacy requirements were being put into place. What went wrong here?
Okay, well, I don't think this is quite correct. First of all, Basel II was still in its initial implementation phase in 2008, so that its intended beneficial impact had not yet been fully felt in the international banking system. Now, Basel II, moreover, could never have anticipated the business models and the associated practices and complex banking products which eventually gave rise to the crisis. For example, it is silent on leverage and also does not place sufficient emphasis on the loss-absorbing qualities of available capital. And these, as we know, proved to be two critical aspects of bank weakness in the crisis. Indeed, I think it is a realization of such weaknesses that has led to the proposals contained in Basel III for a leverage ratio and for higher and better quality capital. Also true that Basel II was not designed to deal with aspects of a macroprudential nature, and I'm thinking here particularly of systemic risk. And finally, it needs to be said that the existence of a regulatory regime, however comprehensive and prescient it might prove to be, does not constitute a sufficient condition for the avoidance of crises. It is now clear that regulatory failure was a major contributing factor behind the recent crisis. And this, in fact, explains why so much emphasis now has been put both by the Financial Stability Board at an international level and by the EU authorities in Europe on a reinforced regulatory regime which contains improved provisions both for risk management and crisis prevention.
So as you pointed out, the world and the EU are looking at improved regulation. In fact, besides Basel III, the European Union has also set up the European Systemic Risk Board, which will come into force in 2011 and which I believe you will be sitting on. How will this change the way the financial services sector is regulated and, possibly more importantly, how it is perceived?
Well, as I have just suggested, the key lesson of the crisis is that in a world of globally integrated financial markets and large financial institutions which have a presence in more than one country, tighter national regulation and supervision of individual institutions must be accompanied by a close monitoring of systemic and cross-border risks. Now, at the center of the EU's answer to such vulnerabilities lies the European Systemic Risk Board, which you have just mentioned, which has been given the specific task of monitoring and analyzing systemic risk. It will also be able to make recommendations to individual national supervisors. And I think in this respect it could be described as an early warning system. Yeah. Now the European Systemic Risk Board will be composed, among others, of all the governors of the national central banks of the European Union, the President and the Vice President of the ECB, and the current President will be the first chair of the board, and we should be having a first meeting in December. Now, the new EU-wide regulatory framework will also include 3 dedicated authorities mandated to supervise banks, insurance and pension funds, and securities. And this, I think, should ensure a higher degree of cooperation among national supervisors in the EU. Now, if you take all these together, the new regulatory infrastructure, together with the gradual implementation of Basel III and of all the recommendations of the Financial Stability Board, this, I think, should go a long way towards restoring confidence in the financial services sector in the EU and worldwide. As for the reactions, well, the reforms have been very positively welcomed, and I think the speed with which they have been devised and adopted is an indicator of the high degree of awareness among policymakers of the threat that a loosely regulated financial sector represents for individual economies and for their citizens.
One of the lessons that you can draw from the performance of Malta's banks through the crisis is the importance of good, sound banking practice tempered by a banker's traditional prudence and strong ethics. Where does this place Malta's financial sector on an international scale?
Well, the fact that the Maltese banks have weathered the crisis with a limited amount of damage is indeed a source of satisfaction, but I think it's no reason to be complacent. Going forward, the banks will face a number of challenges. The first and most obvious one, I think, is the concentration risk, which is carried by the banks through their very high exposure to the property-related sectors in Malta, this both directly in the form of loans and indirectly in the form of collateral which they hold against many of their loans. Over the past year or so, in fact, as one can read from our recent financial stability report, some of this risk has indeed materialized in the form of a rise in both household and corporate non-performing loans and in the number of rescheduling. On the liability side of their balance sheet, I think the banks will have to reassess the viability of the current funding model, which is based, as I said earlier, on retail deposits. Competition for deposits will continue to increase in Malta as new financial institutions establish themselves here. And at the same time, another source of competition, of course, are the new opportunities which are opening up for investors in the capital market. So, at the same time, the banks will have to gradually conform, as we suggested earlier, to the Basel III rules over a number of years, and this will presumably require a higher level of profit retention and provisioning, as well as improved liquidity management. There could be additional challenges, of course, should the ongoing tensions in the international financial markets result in further drops in asset prices and valuation losses, therefore, in bank portfolios. Having said that, Malta's banks face these challenges from a relatively strong position, as I have indicated. The results of the recent stress tests confirm this, and this impression also has found confirmation in the latest Global Competitiveness Report issued by the World Economic Forum, which ranks Malta's banks in 10th place in their Bank Soundness Index.
Thank you very much, Mr. Bonello.
Thank you.